Hello, welcome to the weekly Forex review of AKTRADES for the week of March 3rd to March 8th. We're going to start this video reviewing how we did for the ideas of last week, and then giving you some new trades ideas for the week. We're going to start reviewing last week idea of US dollar, Canadian dollar. When we talked last week, we already entered short. Prices were around this area. And we told you that once prices reach this trend line, which is a daily trend line, it would be best to take out 70 to 80% of your position, because this would be a daily trend line. Buyers would likely try to defend. So my idea that I was telling you last week was take out 70 to 80% of your position right here and wait to see if prices breach that trend line, start upsetting prices below to enter that long-term trade in the short side for this pair. So prices reacted around this trend line as it was possible, and now did a really good rally at the end of the week. And then they are again in this zone, which is, this could be a short zone again, but since it's the third try, we want to see prices reject this area. So we just don't want to enter short right now, but we want to see if prices again fail to clean this high. If this happens, this would be a good trade again to enter short, with again looking for the trend line target and taking out 70 to 80% of the positions. I hope you catch some things in this idea. Moving on, last week we also talked about US dollar Swiss franc. We took the trade, a short trade around this area. When we discussed this idea last week, prices were around this area, and I told you that this area would be a great area to take out profits. It would be your TP1. Prices reached this area and rejected it quite aggressively, but was not able to breach this correction. So maybe prices still showing some weakness. So if you want to enter this trade again, my advice would be to wait and see if prices go back again to this area of 99.41. Once price reaches this area, then watch. If you want to see price breach this support zone and then have a pull back to this area again if you want to enter to the short side. But since this is an area that is right now support, you want to be careful, because prices could again do this, reach this area and try to look for higher prices. So once price reaches here, you are in the 50-50 area. So you want to see how price behave before you enter the trade. And you have to be prepared to enter either in the long side or the short side. So be aware. Continuing on, this trade of the euro versus British pound, it was an amazing trade. We took around this area. Last week, prices were around here. We told you that maybe we want to see either a higher pullback to the trend line or to the base of this structure, which it did quite nicely, and then prices drop sharply. If you want to enter this trade again, my advice would be to wait. My bias is still to the downside, but prices are beginning to retrace. So my opinion would be that a retracement could be around this correction area, around 86.76. So, but this was a gorgeous trade. Light crude oil, this also was one really nice trade. last week where we were around this area, we were discussing that we want to see prices pull back mainly to this area that was the top of the Sunday bridge, or if it had a more aggressive pullback around this area, which is the point of control of this volume distribution. So prices went down to our zone that we were expecting, and they have a quite nice reaction, but it created some kind of double top. So my bias, if you want to enter this trade to the long side, which I think is still bullish, would be careful around this area, because prices may try to make a deeper retracement to the point of control of the distribution to try to take out some weak hands. So you could enter either again around 54.90, or if you see the prices are going down too strong, maybe wait for the next stop. That would be around $53 before looking for some longs. But this was a nice trade last week. And to finish the reviewing the ideas of last week, we were discussing Canadian dollar versus Japanese yen. When we discussed this idea, prices were around this area. We wanted to see prices reject this area of 84.76, which prices at first appear to wanted to look for higher prices, but after the Canadian fundamentals started to drop quite nicely. So if you did not enter this trade, I think this week you could enter, but you want to see a pullback again around this area, around 84.79, and see some rejection around this area before entering this trade. So for this week, we have the British pound versus Japanese yen. If we zoom out, we can see that this pair is coming of a really important downtrend, capping with this huge drop that was fueled by the Japanese news around the 1st of January. And then prices began to recuperate quite nicely. Prices are sitting right now in this support line around 148.21, which in my opinion is an area of highly importance, because this was an area where strong hands or sellers began accumulating selling positions that caused this big drop. So when prices reach again this area, which they are right now, these sellers, if they are still in the market, they're going to try to defend their positions to push the price lower. So what do we want to see here? Simple. We have seen that prices have rejected 1, 2 times, 3 times already. So what do we want to see? We want to see again a pullback to this area and a rejection of these prices before entering this trade. This trade has a really amazing, really good risk to reward ratio. If we enter around, let's say prices pull back and reject, and we enter around here, we want to set our stops above this price distribution, because this is the area that sellers would try to defend. So we want to put our stops above that area. And our target, our first target, could be this distribution right here, which will give us 2.5 risk to reward ratio, which is quite nicely. This will be a TP1. If you see prices coming out strong, you can even drop this trade all the way to this distribution area, making a 4-to-1 risk to reward ratio. So this could be a really good trade. But we have to see how prices react again in this area. We want to see some rejection. Moving on. In the Australian dollar, US dollar, we are seeing this big downtrend. Prices recuperated again and reached this the support line, which is an area where sellers accumulated their sellers position before this main drop. If we see, in my opinion, we are seeing an area of that is forming a continuation pattern to the downside. This would be we have here a shoulder, head, and shoulder. In my opinion, this would be a continuation pattern. We are seeing the neckline around this area where prices here is actually currently at. So what do we want to see before entering this trade? If you are a more riskier trader, you can enter right now. But since prices are exactly at the neckline, this is right now still 50-50. Buyers could enter and try to push prices higher. So in my opinion, do you want to see prices clean this low here? So you want to see break below this low and pull back again to the neckline before entering the trend to the downside. If prices, since we are here, in my opinion, a 50-50 zone, at the beginning of the week start rising higher, then maybe you want to see some rejection around this area. Because if you see some rejection around this area, this would be an even better trade in the sense of risk to reward ratio. So be aware of these two possibilities. But in my opinion, my bias is for the downside in this trade. Continuing with the British pound US dollar. Again, we are seeing the big down move of this pair, and then prices just correct all of this time. So if we check how the volume distribution behaved in this big move to the downside, we are able to see that the point of control of this distribution is around this area. This means that sellers began the move around this area, but they are added to the short positions around this area, being the point of control around 132.42, which is this support, this resistance area. And we see how prices, when prices reach this area, sellers started aggressively to defend their positions. So prices reached this area, went down, reached this area, went down, reached this area, went down. We are apparently breached this area, but remember that this is a volume distribution. So in my opinion, this is still a short trade. I'm looking for shorts, but we want to be aware that this is like the fourth time prices are around this area. So this might be is this the time when they finally reach higher? We don't know. But in my opinion, my bias is still short, but I want to see rejection all around this area. My first one would be if prices show me weakness here, some pin bar, some bearish engulfing, or even if prices push back again and give me like a double top, would be a good time to enter. Or be aware of this. Price could do this. Prices could pull back and even clean these highs, make a new higher high. But if we see that the retracement is deep and the retracement is all the way back to 132.42, maybe we are in the presence of a head and shoulders formation. So we want to see how price behave. That is important to see price action moves. So first, I want to see if prices reject around this area, some pin bar, some bearish engulfing. If prices go back again, I want to see prices fail around here, forming a double top. If prices even breach this previous highs, I want to see the pullback. If the pullback show weakness here, then maybe I can change my idea and start looking for some longs. But if after breaching this high, prices pull back really deep again to this area, then I'm still looking for shorts, waiting for the formation of the next shoulder. So be aware of this. My bias is short, so I want to be looking for weakness here, weakness here. If I breach, I want to see the pullback being deeper and then entering around here. Okay, so be aware. I want to see weakness around those areas. I'm looking for shorts. And to finish the ideas that we have today, we are seeing the Australian dollar, Japanese yen. Again, we are seeing all of this major drop, and the prices pulled back again to this area, which is a resistance zone. As we are watching, prices have rejected once, 2 times, 3 times, and you can say even 4 times have rejected this area. So I think this is a good trade to enter. You can even enter at the start of the market later. This would be a good risk to reward ratio. If you enter at the start of the market, your stops could be around this area, around 80.38. And your first target would be around this area, making a 2-to-1 risk to rewards ratio, which is really, really nice. This TP1 is even conservative. So this would be your TP1, and your TP2 could be around this area of 75.56, giving you a 3-to-1 to return ratio. So depending on your trading style. So that's all the ideas we have for this week. I hope you enjoy our videos. Remember, you can follow us on Instagram at AKTRADES. If you have any doubts or inquiries or questions, you can leave us a comment in the comment section, and we will respond as fast as possible. Hope you have a great week and make a lot of tips. So we see you next week.